Hi everyone, this is Steve from thegreshka.com on the advantages and disadvantages each party has in options trading. Let's begin the discussion by looking at the advantages and disadvantages for both parties, for buyers and sellers in the options market. Now, a main advantage in trading options is the use of leverage to control a bigger amount of shares or underlying. Leverage varies depending on the option contract, but for starters, it's enough to remember that stock options have a 100 multiplier, meaning each option contract controls or has to do with 100 shares of the underlying stock. As you go, you will find a lot of other products like futures or indexes that have their own standard multipliers, very different from the standard 100 that we have for stock options. Another advantage for option buyers and option sellers is that options are great tools for risk management. Options are synthetic instruments. This means that you can structure and combine option instruments into many creative ways to work for you while reducing the downside risk, even as an option seller, should a trade go wrong. Another advantage for both is that they can easily monitor and estimate their probability of win. The delta value, for example, is a great indicator and can be used as a guide for probability of win when trading options. One more advantage for both is that there are lots of underlying on which option instruments are available, like stocks, indexes, commodities, and the like. One main disadvantage that we see in option trading is that not all products are available or are liquid enough for you to trade on. If a product is not there, then the opportunity to trade it is as well absent. If the options are not liquid enough, and this is different from the liquidity of the underlying stock itself, it's hard to find a counterparty for your trade, and the bid-ask prices are not going to be very efficient for you as well as an option trader. Another advantage for both parties is that the profit or loss potential is reflected on the pricing of options. Riskier instruments are pricier, and there is no such thing as a free lunch. Going now to the pros and cons of being an option buyer. As an option buyer, you engage minimal investment, and there is no margin required for option buyers to participate in market movements. Cost of the option is the max loss, hence no further margin is held by the broker when you buy options to trade on. Another advantage is that max loss of the trade is capped or minimized for the option buyer. As an option buyer, you also have unlimited participation in winnings. A main disadvantage in option trading for option buyers is that your investment is subject to time decay. Despite the advantages of capping losses and unlimited potential wins, this is one of the biggest disadvantages of being a net option buyer, that you have to time the market right in addition to the direction as the option decreases in time value as time passes. Going to advantages and disadvantages of being on the seller side. Point 1. You can improve or reduce the purchase price of the stock you hold selling calls that eventually expire out of the money. This strategy is also known as writing covered calls. Point number 2. IV is often overstated, implied volatility. Knowing this means understanding that options are most of the time sold at a premium. This works to the option writer's advantage depending on the intent or strategy implemented. I think a main disadvantage of being an option seller is having high margin requirements, especially on naked strategies. In fact, margin expansion is quite possible. You need enough capital as an option seller to be able to cover margin requirements, or you risk other positions being prematurely liquidated should you not have enough cash to put on if margin gets too tight. Another disadvantage of being an option seller is the unlimited loss potential. This depends on if your strategy is hedged or unhedged. When you sell naked positions without hedges, you're basically naked or unhedged, and this subjects you in turn to unlimited loss potential.